Hey friends, welcome. It is Wednesday, June 10th, 2020. My name is JJ. You're watching Bolt to the Bust. Thank you for jumping on board here. I just want to take a quick couple seconds here to thank everyone that subscribed. We are up past 54,000. The channel continues to grow. Thank you very much for getting us here. Also want to thank you to all the new Patreons. And I believe we're at nearly 60 Patreons now, which is way more than I ever expected. So thank you very much. Now, if you didn't know how it works, YouTubers like myself, a lot of us are having a more difficult time getting views and getting placed above the mainstream news sources that you typically see in the recommended news. Not all channels, but channels that go against the mainstream narrative tend to have a little bit more difficult time. And what we do here is try to paint the big picture of the financial system. We try to dig between the lies and read between the lines of the headlines. So thank you to everybody for your support. Let's go ahead and get into some news. And I apologize I did not get a video out yesterday. It was a very busy day for me, and family situation as well as working. So thank you for coming back here today. Now this piggybacks off of our last video. Now they finally declared the official recession. Now I actually feel really sorry for the people that sit back and wait for the official declaration of a recession to come out, because if you wait for that official announcement, and that's going to be the Bureau of Labor Statistics in this case, where you're going to be way behind the curve, way behind the 8 ball. And yes, the recession was brewing for many months before the shutdown actually made it obvious, with all the job losses and the store closures and whatnot. And the only reason why we were able to get this fake recovery from the financial crisis in 2007-2008 was because of mega bailouts and stimulus in government programs. So we're seeing the same thing unfold, but to a much larger scale this time, as expected. But if you're looking at the government or the officials to give you the real deal, well, you're going to be misled. So let's go ahead and start right here. This is out of CNBC. Advisor Larry Kudlow, quote, "Looks like we've hit a turning point in the economy." Now I'm just going to summarize what he is considering a turning point. So basically, what they're calling surprise jobs report recently, well, we dug into that a few videos ago, and that was this one right here, Jobs Deception Exposed. If you want to know what's really happening with the job numbers, maybe check that video out. But most of you probably know, if you've been on this channel, the job numbers that they put out, the statistics, and this goes for a lot of the numbers they put out, GDP, unemployment numbers, the inflation numbers. They're all cherry-picked, they're all manipulated, and they're all highly inaccurate when you look at what's really happening. But nonetheless, Kudlow's out there saying that it was that jobs report that makes it look like we have a turning point right now in the economy. My question is, a turning point to where? A turning point into hell is the most likely scenario, in my opinion. Of course, they can keep it propped up as long as they want to via endless funny money out of the fiat banking system. But does that really mean that the economy's strong if everybody and everything needs a bailout? Right? So if it was just bailouts and money coming out of the Fed endlessly to create a strong economy, why not do bailouts? Why not just keep the bailouts continuous forever, nonstop? Why do we ever stop bailouts? And why do we wait until 2008 for bailouts? Why didn't we just start these decades ago? If bailouts were the key to a strong economy, why not double and triple and quadruple the amount of bailouts that we're doing already, if that's the key, if that's a key to economic recovery? So you can see my point here. It doesn't make sense, does it? If that was the key, if it's just about the Fed pumping money into the system, giving money to people to go ahead and spend, well, we know that's not a long-term solution. It's a band-aid on a broken leg, and ultimately it's going to collapse the currency, and it's going to cause hyperinflation. Now, so far we've seen deflation in many areas, so a lot of people can't even wrap their head around hyperinflation. They say, how's it ever going to happen if people don't have money? Well, when you have less people producing goods and services, and you have more money for people to buy these goods and services, it's a simple question of supply and demand. You have too much money, not enough goods and services available, and then you start to see inflation because the demand outweighs the supply. So it's pretty simple. It's basic economics, but many people are still falling for this dream, this pipe dream, that the economy somehow has hit a turning point and that we're recovering. This article also goes on to point out the PPP, the Paycheck Protection Program, another government program that prevented an even worse job number, and it may allow a few businesses to continue, who knows how long, but the businesses that failed still saw an enormous jump here. Let's go ahead go to this next article here. Article here out of CBS, bracing for the next phase of the recession, bankruptcies. An excerpt out of this here, recent data shows 722 companies sought bankruptcy protection in the U.S. last month. In 1 month, 722 companies. That was a 48% increase from a year ago. So we're not headed in the right direction. Of course, when the numbers come out for this month, when they come out next month, showing what this month data is going to be, we're going to see if it's improved, but my guess is it's going to continue to get worse. But just think about what would happen if it were not for the stimulus and the bailout programs. Technically we're in a depression because all the numbers are worse than the Great Depression. The unemployment numbers were higher. The drop in GDP eclipsed the Great Depression. But yet most people don't see it and they don't feel it because of the stimulus, because of the easy money that's being pumped into the system and given out to people. Back in the Great Depression, of course in the 30s, it wasn't as simple as giving somebody a prepaid debit card or direct depositing money into people's checking accounts. They had to have soup lines to feed people. But today the soup lines are miles of cars waiting for free food and handouts, and of course electronic stimulus being pumped into the system. And speaking of stimulus, here's a pretty staggering number in my opinion. Where's my money? 35 million people still waiting on stimulus checks, feds say. Now here's the real sad part about this. It is the people that didn't file tax returns that the IRS is having the most difficult time locating. Of course, if you didn't file a tax return, they don't have your checking account information on file, so they're having more trouble getting the money to these people. And it's typically the lower income people that don't bother filing a tax return. Of course, there's other groups of people too that choose not to file tax returns. There's many different reasons, but the biggest reason is people just don't make enough money, or people work for cash, such as restaurant workers, servers, who most of them get tips. Excerpt here out of this article, the panel found 13 to 18 million people do not earn enough each year to qualify for the relief payment. Of those who do qualify, many do not file tax returns for a variety of reasons, leaving the IRS with no way to find them to deliver their stimulus checks. So how backwards is that? Many people do not earn enough to qualify for stimulus checks. So the really poor people that don't earn enough are getting completely left out of these stimulus checks in some cases, and millions of people. All right, now back to this article for a minute. Looks like we've hit a turning point in the economy. Well, apparently the Fed disagrees, because the Fed is preparing for a lot more bad economic times. Let's take a look at another article. Another one here out of CNBC. The Fed sees interest rates staying near zero through 2022. So another 2.5 years of near 0% interest rates. And of course they also say that the GDP is going to bounce back to 5%. But keep in mind, GDP is just spending, and if you give people enough stimulus, if you do enough direct deposits and prepaid debit cards for people and stimulus, and if they spend it, that's going to make the GDP number look good. So you can see how fraudulent that number actually is. It doesn't mean we're actually producing anything. It just means that people are spending. So if you go to a movie, you have helped the GDP number. So go sit in front of a screen, eat some popcorn, and that is a sign of economic growth, because it's going to help the GDP number. So pretty silly, right? Well, that's the world we live in, unfortunately. Right? So if we were hitting this quote-unquote turning point, if the economy was going to be headed back into a positive direction, why would we need to keep rates near zero? Why not raise interest rates and then allow people that want to save money to put money in their checking or savings account and actually earn some interest on that money? Wouldn't that be remarkable if we were able to do that? Well, of course, they can't do that, because all the debt that people still have, they'll have to pay higher interest rates on that debt. So the banks still get money at near 0%, while savers get really walloped because they're not getting anything for their savings. right? So why save money? Why not go out and spend it? And a lot of people are rushing to spend it because they think prices are just going to continue to go up. We see home prices still holding steady, not dropping. And a lot of people are seeing that and they're rushing out to try to buy a home. Sales are down because inventory is down, but the ones that are selling are still seeing some pretty strong bids, and prices are not dropping yet. Right, so this is a central run economy, a centrally planned economy. They're trying to prevent deflation to try to keep this illusion of economic prosperity. And just look at all the shortfalls now in many U.S. cities because of the lower tax revenues. And if you let property values drop, then you're going to see even lower tax revenues. But the problem is the people that have to pay the taxes, most of them are broke or living paycheck to paycheck. And this is just one big disaster. So everybody, thanks for watching this report. I don't think there's going to be any painless way out of this. I think they're just delaying the day of reckoning. So continue to prepare. Do not believe the narrative that the economy is turning a corner. But I think they're going to try to keep the appearance that things are getting better. And they can tell you like how many people are going to restaurants, how many people are going to the movies. That is not economic prosperity. Right? Sitting down and eating a steak dinner or a hamburger is not the sign of a strong economy while you swipe it on your plastic card. Right? This entire economic system needs to collapse, reset, and it needs to be rebuilt with basic fundamentals that are more than just bank stimulus and debt creation. Right? Will we see that? Will we not see that? Maybe we'll just keep on going into endless central bank stimulus and hyperinflation. Either way, you should prepare. Prepare with assets that are going to go up if there is hyperinflation. I personally think there's going to be deflation first, so I'm mostly in cash, but I do have a fraction of my worth in precious metals. I'm not giving investment advice, but if there is hyperinflation, maybe it would be nice to have some precious metals that are going to go up. You see countries that have completely destroyed their currency like Zimbabwe and Venezuela. You see gold in the millions of dollars. So the people that were holding gold and silver in those countries at least have something to see the value skyrocket, see the hyperinflation take place. But if you're just holding paper, if you're just holding the currency that's going to get devalued, you're going to be left with nothing. And you may soon find out that your life savings, your retirement, is only going to buy you a couple meals and maybe a movie. Pretty sad, but that's where we're headed. We got to be cautious. We got to keep our eyes open on what's really happening. All right, come back for more economic reality here, folks. Bye for now.